Okay, there's supposed to be some news coming out here about the yen, but it just happens to be some type of top of the hour situation here. There's always a big kind of where they punch the market around. There's a 5 minutes before and after the top of the hour. They just kind of take the market for a little bit of a outback ALE, bust your face, tune you up a little bit. So those kind of orders I'm running right now. I put a bunch of some of these time decayed an hour, and some of these were going to sit all night in here. But I'm just trying to capture the contrarian entry here. I know it's going down this down channel. The only places really, this is the 1 hour euro yen. The only places to really sell this was at the, this is the feeding line. This is 100 pips, this is 50, this is 100. So this is literally, if you draw a 45-degree angle here, you're looking at 45 pips, I'm sorry, 50 pips per day. And we totally made 50 pips in one day there, if you consider the smash down to the 100 on the open. When you retrace 50, you're out. Trade's over. Go back to the full upright position for takeoff. And then you would lay another grid in there. So you'd capture this plunge, say here, and then you would just keep running that same recapture plunge theory where you're buying new lows. Yes, if you had sold here at the 100-yard line at the top of this channel, that was certainly the logical entry. That channel should be a little tighter. So really, I'm going to draw my channels on close here. So we broke out of that channel. So I think it's going up. But I know they have to come down here and trap these people. Just seen it so many times. So especially coming into this time of day, you will see a big wick, possibly. Not to say it's not going to come up here to the 50-yard line and then just go to the end zone again, the 100. So this seems to be something that you could imagine making. Instead of 1,000 pips a week, you're making 50 pips a day. So here you're making 50 pips and a half a day, because this, if you get it just so happens that I'm zoomed out just perfectly to get this rate of change, 50 pips per day. So you can see that, you'd have to drag your quadrant over, so you'd have to copy that situation. So this is your box of 50 pips per day. You have this much, it's like the clock's ticking. Can you make your 50 pips by the end of the day? Maybe you only make 25, but if you're going to put your order bank in like this and it lasts, you put a 50 pip grid in here and let it sit all day. So you either hand place it down here, or you hit a button that just so happens to start dropping them at the new low. So I'm thinking more like right here where people are getting stopped out, or there's going to be a fight. And the scalpers would dump here, but if this thing should just go sideways too long, it's going to run out of momentum and people are going to lose interest. And we will see this trend line being tested, the next rollover point. So a lot of people will be selling there, right? It's going to keep going down, but if you only try to make 50 to 100 pips, you can kind of see here, you would trade with, say, 25, 30, 45, 10, whatever pips. And so I don't know if there's news coming up, but here we go. So if this comes up to here, I'll be out of the scalp. That's the plan. And then I look to get back in on limits again. Now, how tight are the limits? Because we just spiked down about 30 pips here. We didn't make it to the 100. Everybody wants that 100 just because it's easy money. These entries don't have too much to do with any type of trend line, in the sense that the market really is interested in this number. And without regard to the fact that one of these moves was very breathtaking and one was not so much. So the breathtaking move is this channel here. this comes up on the 1 period moving average right into that. If you make this a really wide trend line, so you can see this turns out to be a very important window later on, because after they fill, after people get their 100 here, and then they get their 100 here, they get out, and well, just before the 100, you had your top become a bottom on the trend line, on the trend envelope. Then they're off to the races, and then this is the perfect entry because you get the top bottom at the 100 again, and you're looking at a beautiful 2 days. You made 100. Here you're making 100 pips a day. So you're either making 100 pips a day, or you're making maybe 50 pips a day. And I suppose if you bought here with a wide stop, you could claim that you made 50 pips a day here. And then the other choice is to go and to kind of get a feel for that philosophy, that style of trading, is just break out this Gann grid. You got to turn it on inside your. You got to customize, right mouse click on this toolbar. So you come in here, you got to search it out. It's not in there. Here's your Andrews pitchfork, but it's a little bit, tough to navigate. So you can put that in there and all this stuff. Pitchfork, took me a while to figure it out, but I guess it's as bad as, no, this is the Gann grid, which is like a pitchfork on steroids, but this is easier to navigate for me. So if you wanted to make 50 pips a day in this diamond, it's going to look like, I'm going to cue it up here to the perfect, without regard to the price, just go for the fit on the, so you should be able to drag that corner to corner, get that to 50, 25 degrees, 50, 24 bars, so it's 24 by 50. I think that's how it's supposed to be. And, well, it's hard to get exact. But this is a doable rate of change. So if you're in this moving average and you want to hold in that trend, ride this puppy down. Not to say it's not going to ricochet. And so your Andrews pitchfork, I'll put that on top. Guess you could use this for your counter trend entries. So you could counter trend the pitchfork against the Gann grid. So say this is going to be your trend trade, this thing. And the black is going to be just a binary, boy, this is scrolly to navigate. I don't know how to move this puppy around. Okay, so here it is. Now, this is just the Gann grid without all the grid, just the 3 times. So here you can get, maybe this is the other time frame. So this is the channel within the channel. And if you're dragging that around, now if you cue that to the same pip range, you're gonna have to. I don't even know how that's set up to resize that. I guess it's dependent on how far. Yeah, how far you move this. So this has to be you set this to the corner. Duh. Okay, so this is set to almost the same. About here. And maybe this is going to be your entries. And of course, the only thing that matters is right now you're only using this for this fractal back here, so you can say this. If you take it off the 50 pips per and go for whatever the market's really doing, so the market's really doing this, right? So here's my index off of this. So I'm indexing this big rollover where everything changes. and then I could take the pitchfork and drag that to the other rollover point. So now you have to be long for this scalp to here, but we could replunge, but I really don't think I could trade the left side of the chart. At least the broker's not going to let me. So that's a bummer. That's a bummer. Here's the current trend line. I just keep drawing these things over and over again. So we broke out, pulled back here. There was a great scalp to the 100 there. If you believe that resistance becomes support, and that was it. And they were like the 25-yard line there. Get to the 100. Everybody bails because of this double bottom becomes a top. Everybody cashes on their easy 50 again. They keep feeding off that 100 to the 50. And if they come down here, I'll buy. And if they come up here, I'll scalp out. And then if they replunge, I'll buy. So those are all set to rebuy. And so if you're really bullish and you know it's going to pull back, you just keep trailing with limits behind it, because you're never going to miss out. It's kind of hard to believe. Like if this was, say you were selling this down thing, and this is a 1 hour chart, so you kind of got all the time on the planet, right? To, this is a bottom. We went down to the 100. People bought at the 100. Where are they going to dump it? Well, all the dead cat bouncers are going to come in at 25 pip bounce. They're going to dump. The trend traders are going to take it over here. I'll take it to the 100. They'll take their easy 100. Then the 100 scalpers take it to the 25 again. This is what's disturbing. If you dialed in a trading system that milks this 25, 50 pip box, you're good to go. You're done. That's all you need to know. You're buying this plunge, you're dumping. You're selling, you're dumping. You go sideways, you bracket. So you have a doji key and you have a limit key, because they're going to punish these currencies. Look at this irrational exuberance here. Everybody's all giddy. Everybody's buying here because it's the highest probability entry, plus just you're at the 100, you got a top bottom, third touch on the trend line. That is your, she's young, she's hot, her family's dead, you don't have to listen to mother-in-law nag you, and you ride her for 100 pips clean. Here was the last flag. Boom. Beautiful relationship. Here, this is why, if you're romantic, you probably dated or started dating her down here. At this point, you're like, woohoo, and then, oh, maybe, and then you call her back that one time. Oh, yeah, well, call me back again for sure. Oh, yeah, well, I met your family. Oh, I mean, I didn't meet your family, but, and of course here, what happened here is you loaned her your high performance car and she wrapped around a tree here. Something bad happened. But this is 100 pips in one day. Here we revisit this. Everybody gets in, they pull it to here, they dump. People are gonna dump here. Is this gonna keep spilling down? I'm out. I'm in and out of these things. I can't imagine holding on to this stuff. Look how many pips this is. Are you kidding me? Here's the 50-yard line. 1 hour. Cute little triangle. Here's actually the doji becomes this. People are getting in here already. This is kind of your low risk entry to sell here with your stop here. So you're risking this to make at least a stupid ass round number. Just step away from the Fibonacci, please. It's pointless. It's worthless. When a bottom becomes a top at the 25-yard line, you sell. Or if you're afraid, you put a buy stop and a sell stop. You let it plunge 25. You take your 25 and run. But you already got buy limits going the other way here to go the other way because it's 100. constantly changing your you're gender confused. You're a C on that LBG. You're the C. But that's okay to be. It's better to ride the wick than it is to predict the direction here. If you're simply buying on the 50-yard line because you know there's a high probability that it's going to try to get back to the 100 doesn't make it. Now, if you hung in there like a trooper, it made it. But everybody's like, wow, I'll take that because it was such a quick move. People are like, whoa. And I'm sure you could draw another trend line in here to see the very first crossover. So if you're going to put a 5-period moving average on in trend line style, it's going to look like this. Whereas you're looking for the tightest possible reason to buy this thing. The first point at which resistance becomes support. So you bang on it here, 3 bangs, break out, close above, literally, come back, buy. We'll buy just because you're coming in here. And you have buy limits down here that never filled anyways. And of course, everybody's going to dump here. Isn't that going to be the typical standard operating procedure? But it's just, it's a lot of work if you want to make 10 pips. 25, 50, I guess there's if you got some way to get the order placement in there, you can take advantage of it. I have no doubt you can ride these things. Okay, so 15 minutes in. This is the 1 hour. We could slam to here and we could plunge at any moment. So go to the 15, you can see people have already gotten out. All the scalpers just raided that thing. So if I dump everything I'm in now, I would buy on a plunge, a re-plunge now. So I just get in here on the re-plunge. And I still have all those orders sitting there. I don't know what they're going to do with this currency. But I'm buying this trap down here right now. So if we go to the other yen pair, this is my buy orders here. Dollar yen. Buy low, sell high. Nothing I can do about it. Big monster trend line here. Itching to be broke. Copy that. Find an envelope in there. A cheap entry. So looks like 50 pip window there. Here's the next. The bigger channel. So you're really up on the edge of this channel. And if they can crack that trend line there. So here's the keys on close. If you take out the wicks, you can see the killer inflection point. These nodes here, you got these guys, you got this. Yeah, before that. And then you got the cross channel. But if we take out this thing here, and this thing can squirrel its way past, and there's a huge volume of uncharted water up here to fill. But there's also the bullish trend line that could be annihilated. So we put the trend line in like channels here. Now you can miter box this thing out. This is the 4 hour. So you're in this diamond right now. And if this doesn't hold, if this trend line here, we've got to hold this. People are expecting this to be the next walk-up channel to get through that other channel. So it's like channel to channel. But it's also about just how many pips you're trying to make. So if you're scalping this thing, it's always going to be dumbass orders like, well, I'm buying down here, and I'm selling here. I got to stop here. And, yeah. I mean, and then this whole thing here, maybe you have a whole 10K peppered across this. Maybe you've got 50K just strewn in here, right? Because you never know. Like here, if you had 100 pip deep vault of it's up, and you just start putting in these buy limits every 50 pips, you only got filled on a 4K. Your break even on this, you're up on this one if you only filled on the 50s. So imagine the news is about to come out, so I'm sure I don't know what the hell this drama is about down here, but you just have orders sitting here, so you're filled on a 3K, and you're willing to buy 10K, so buy every 50 pips down. And you just throw those orders in like a goof. Now, there's the double top, so you could have an order for that. You could have an order for this. So you have your stupid buying the 50s, but then you have your, oh, well, looky here, and then you have, now you're in 6K. And some of the stuff's just not going to fill. Like if you had a buy limit here at the 100, when they came down here, they never got you. It was about trapping. It was about this being the big thing, and you just have to accept that it's a brutal range. It's going to take a while to resolve that. So this could come plunging down into this, obviously. So I put some sleeper cells down there. And then just right back here, because this is where you're really going to see people come in like crazy. And I think that's pretty obvious. So at least for the scalp. And then after that, you can always re-enter. For the swing now, you could also put a buy stop in right now. Or buy at the market. Every time it's down, every 4 hours it's down, you buy. But it looks like it's up for a smash. Okay, so same story here. Buying down here in fair value. We're going to sell up here because it's high. We're going to buy down here because it's low. Sure, you could put these channels on and get all crazy, but, you know, you're a long ways from entering. This is just static trading. You don't need to do any analysis to grid trade this. You know, if you want a 15-minute scalp, you know, it looked like this. Buy limits. It's 15-minute. It's the half hour. It's 1 hour. So we got to plunge all the way to the 100-yard line in 1 hour. So that's an easy. So you just throw this 1 hour out there. God knows what's going to happen, but the random trading, nothing better. Look at this ridiculous behavior in here, and look at these wicks. This is the Euro Swiss. What on God's green earth is going on here? And the sellers. Did anybody take any notice of this triple top at the 100-yard line without the use of Fibonacci? This is ridiculous. That's 50. That's 1 week from here to here, 50 pips. You've got to be kidding me. Look at them, just trapped in this brutal. Like, what does your moving average make of these wicks? Stupid to think like that. People just look at this thing. Look at that 20 pip window. Good God. So who's not buying down here? It'd be a fool not to put buy limits down here. All the time they're just sitting there. You're always willing to buy every 50 pips. What is wrong with people? I guess we're all lazy. Well, I can put an order down there. What's the point? I'll just backtest it. Does this thing drop 100 pips? As long as you got enough money in the account. God. God, I mean, didn't everybody figure here? Wait, now here's the moment of truth. Is it going to go full auction to auction? Especially got this 5 minutes before the bottom of the hour. Now we should just rip north now. But there could be a vicious kickback before we go north. So here's the floor at the 50. Look at this beautiful double bottom on the 5 minutes. Double bottom here on the 15. Look at that. Right at 50 pips on the 15 minutes. See this trap? This scalper's dream. You get in here. High probability dump to here. The trap, new lows. Here comes the buyers. Here comes me. If you're a swing trader, you're just laying in grids like this, like a goof. You scalped it here. You replace buy limits. Trading's for dumb people. You know, this is a big issue is, are you dumb enough to trade? Beginner's luck. Well, I did what he thought. I bought at the 100-yard line and I dumped it to 25. Bought at the 50, dumped it to 25. Gosh. This is like stupidest way to make money. It's all about price, I guess. It's like those hamburger stands. So here's my dollar CAD. I'm just putting everything on the 50s. Then I'll put everything on these unknown zones here. I heard it's supposed to go down here. So this is how you got to trade it. You don't know what's going to happen. The week's coming up. And you take your orders and you just place them at new lows. So if they come down here, now some of these are going to be scalps and some of these are going to be like, yeah, if you want to make 300 pips risking 50 pips, dollar Canadian. If you just bought at the round and dumped here, you made 100 with a 50 pip stop. You re-enter here with a 50 pip stop to make 100. You could have just let that go and make tons, right? You could have re-entered here. And of course, here is at the 50-yard line, the re-entry to make the easy 50 with the 25.50 stop. All day long. Now, who's not buying this if it plunges? Would the news matter? I mean, this is top. This internal top, this huge structure that everybody wishes it would come back here so they could get in, and then it does, and then they get in. And they ride that puppy all the way to the top of that. Oof. Here's like a sloppy trendline breakout roll over. But it's all about how many pips you want to make. So this is 300 pips. Well, if you put your buy limits here, where all the trend traders have their stops, so you're going to have to buy the stops off the trend traders. Where do you put your stop when you think you're wrong? I just saw this guy's presentation. Oh my God, are you kidding me? Like, you know you're wrong on the way to your stops. Doesn't everybody go, oh fuck, I'm losing. Oh, should I wait till they hit my stop, or should I just stay in this awful relationship until I end up murdering my wife? Well, that's the thing. At that point, you realize that you're a scalper. I'm just going to say, if you see the market dropping and that bothers you, you need to get a girlfriend. You need to, if you can't handle being married, jump ship immediately. So I would say to cut your losses short. I'd say just get the hell out. But then again, the people that the trend traders, they stay in the relationship for better or for worse. So I get that the trend traders, you'll typically find these people are married and they have children. But if you're a sociopath, you maybe want to be a scalper. And or if you're just really anxious and you're tightly wound, maybe you want to be a scalper. But it's certainly different, a whole different world, because these people that can endure equity swings, I don't know how they do it. I just feel like I'm being led down the primrose path. Well, the trend comes to an end, I guess. In other words, even when I'm in a trend, I mean, if you scalp the entry of the trend and then you hold through the trend, that's the best of both worlds, right? You're married and you have a girl on the side. So maybe you don't want to get completely divorced. That's another way to approach it. Now, that would definitely be a real conflict of interest, because if you're an all or nothing person, now you're in trouble, because you've just picked the you try to fine tune it and optimize it and get the perfect model. They used to call it modeling the market. When the first robots were built, you would try to create a model of behavior, and then you would run this and it would look for that same behavior. Now people look at patterns, but I think time is the big equalizer, because all the options decay on time, and that's a big part of the market. And the hedging and the fact that people just need to move money. And I know the market can make some interesting patterns, but gosh, I mean, in the end, it's really about the price. And have they trapped any? Has the market overextended into unfair value? I'd say the trap is unfair value. So here it's about right up in here. If this is considered to be baseline here, normalness, everybody's selling on the outskirts of town back towards the center structure. But when they take it down into this new zone, then this is the obstacle now. So everybody's sold here, but it doesn't mean that it can't get trapped below this, fizzle out, lose momentum, and then the way in which this thing unfolds to the north, if it goes up, is never going to look like it did the last time it did that. So we can't really look back here and say, yeah, well, last time, they literally slammed this thing down 100 pips, got the money, and ran to the 50. People got maybe back on the 25s, but look at this thing go after that. I mean, seriously, how can you compare this vacuum hole to this? You know, these vacuum holes, this is insane vacuum hole. If this thing ever fills and they trap here, they're going to go after this whole thing, and this is going to go it's just going to go off the chart. Right? Look at the weekly view of this thing. So, in the big picture, this is the top. This could be the top that becomes the bottom. So at least we'll take out this trend line. That's quite a pullback. This is quite the trap up here. They trapped these people really hard. When they pulled it back to here, everybody got in, because this was the floor. So we may have to come all the way back to this. Try to bounce off of that. God knows what they're going to do to this thing. But I'm only worried about the next 30 minutes here. So here I can imagine making money in this world here. Where, okay, so here's your breakout. We're supposed to hold that. Now, breakout theory says we got to hold there. If we don't hold that, we're going to collapse, but it doesn't mean I'm not going to buy down there. I just have this for entertainment purposes, like people put up those stupid-ass Gartleys. All that Fibonacci nonsense. And we can make a channel off of that, and then we can make a pitchfork. I'm not going to get the pitchfork out. It's just too much work. And we just keep on making... this is the middle tine on the pitchfork, and this is the outside of that. Just do a even, somewhat even channel there. So that's the down channel. Here's the up channel. Take this obvious rollover. So we're right here. This has got to hold, and this would be the channel envelope we're going to look to ride. This is the really bullish projections, and here's your dreamland projections up here. But it's really going to just be about getting to this round number in the end. I think that's just all that really matters. I don't know if we can rocket up to this right away. I would definitely want to buy in limits here. Maybe in the next hour, maybe in the next 3 hours. So you're always placing your orders like that. And always trolling for these. You have a hand-placed order. You just have a... Because I don't think unless you have a perfect script that happens to drop in there, or you just cover this, canvas this with like, say, 15K. You pick all that up and then you ride it to here and you dump it the round. Maybe on everything you're in. So you capture zones. And right now you're in a capture zone for the big swing traders are loading up on... scalpers are certainly having a riot here. All this new low stuff is pretty quick and dirty trading because you're not in very long. Like this is a half hour. So if the sellers don't come in here like they're supposed to, and the next trend line of break is going to be right here, then it's going to be probably the next target's going to be here for people to sell and people to get out on their longs. I don't know when this news is coming out. So here we're buying low. Here we're selling up here. We're buying if it pulls back if we're lucky. Here's a good buy right here. This looks like a nice place to put a buy stop. So just buy at the market because broker's got an awful spread. So here's a good buy. I buy that trap there on that 5 minute. British pound. So if you think this is a scalp right now, where since we opened Asia, all the bulls had their stops here, and then you cleaned out to this, but you may have to clean out to here. So if I get stopped out of that, I would just put buy limits right at the apex of that triangle. I'll buy this thing if it plunges into that. And dollar CAD looks like it's going to plunge. But then I think they're going to fill this big hole on the upside. If you look at the daily dollar CAD here, this is a classic setup. If this top becomes a bottom, this little itty bitty top here holds as a floor, then it's clear sailing. There's 300 pip void on the north side here. Always going to buy here if it plunges back to this. Any of this stuff, but you got to run a real broad grid on this CAD because it's a wild pair. It's a wild pair. I mean, these people in Canada, they're out of their mind. Drinking beer. They're out of their mind. Look at this. They can't decide anything on this daily dollar CAD. That's going to be one hell of a scary break out there. I guess the shallow trend traders got in there. They look like geniuses. Here's your envelope. Here's the top. All the bulls are projecting up into this, and here's the horizontal. There's the really big target, and then here is the one that would be the trap. See how close to the trap window? It gets very frisky here, and it's going to be like a zipper. It's like taking out a zipper right at the 100 there. And this is crucial. Typically you get the smash up, they'll clean that out, they'll rip it back. It's never too late to get in. because you have the rip back. So we might be having that right now. So always going to have my scalp orders situated around the 100. And it just so happens that the 100-yard line here is this perfect top bottom on the 4-hour. Go figure. Right? You can just set those Fibonacci tools down and relax. Step away from those candles. Go to the 1-period moving average on closing prices. And this is just let it happen. You're trying to lay a trap down here, trap all this stuff. After it cashes out, come back, reload the gun because the zombies are coming back. Just because you bought here and rode it to here doesn't mean you can't buy it again there and ride it up. It's just, and here, 100 pips in the trap. It's going to be some kind of crazy, I don't know. So all these interest rate things are coming out and whatever's going to happen. And here's my buy at the market, British pound. This thing looks hell-bent to keep tanking. So you got to maintain this channel right now. This will be your most bearish projection. And your targets would be certainly this. And this top. There's a baby top in there just above the round. So that's all my buy limits would be. Let's see, I'm about to get filled on this. So I dumped this scalp on the... okay, so here I think we're going to go and here's where the moment of truth is. Is this bottom the floor, or are they going to go auction, rape these people, which means they're going to take out the low of the day by a neck and then rip this through the high of the day, go through that 100-yard line to this 100 pip. But all the sellers are going to come in right here for the scalp back right here. So if your sell limits start here, this is going to be your trap on the sell side. All your sell limits are going to be peppered up here with scalp backs on them. And that's if you're going to counter trend trade that. You may want to just buy on pullbacks on a 5-minute chart if you think it's going to go like into that mode. So you switch to the 5. Here is the more subtle top bottom. This top almost becomes a bottom there now. We can weasel across the yard line. If you don't want to chase it, wait till they trap people here and buy on a pullback to, say, the 50-yard line. So you're just coming behind it with trailing buys so you don't chase it. You're chasing it with buy limits, so you're coming behind it. And even on this stab back here, that's such a high probability scalp. And you can just see that you know how much money you made. This is the big lofty goal, but it may take all night to weasel up that thing on this 5-minute chart. So you gotta have trailing buy limits running behind. So if I'm really bullish on this thing, I'll be like, yeah, let me add to that. See, I bought too high there, so let me put buy limits in the 15 there. So I just canvas it's like instead of most people run these trailing stops to protect their position. But if you're really a trend trader, you're running trailing buy limits to gobble up their stops as it's going in a direction that you think is, either up or down. But, God, mosquitoes are attacking me. It's a very crazy, in this 5-minute chart, a lot different than the 15. So the sellers have to come in here on the 15. And this is 0 to the yen, but there should be quite a fight. We probably could go down 300 pips later on. Who knows? But just for the this kind of volatile, when they start to open up here this time of night, it gets volatile. But then these spikes could just be scalps, or they could be a place to just, okay, you're in. You wanted to be in that because you're going to hold it for 3 weeks and you walk away. But I guess it's too boring to think about just having 1 or 2 trades a month. I want 1 or 2 trades every minute. So I'll go to the minute chart and just look at it like a tick chart. So you'd be trading a tick chart here. And just delete all this stuff, and so you just draw a trend line on this. The tightest trend line you can get. So this is the, and then just find the 90-degree angle to that. And that's what your channel will be built on. Of course, these channels are going to come and go. We definitely want to buy on a pullback. It doesn't matter. In other words, if you're going to do that Gartley nonsense, you're going to put 40 Gartleys up, and you're going to trade. You're going to enter on the pin tip of every one of those. So if you had a GAN fan in here that was filled with a zillion, you're like, yeah, I'm buying down there, sure. Buying down here, way out in space, right? But who's not buying down here just because it's so many goddamn pips deep, right? Okay, looks like we're gonna make an attempt on this 1 minute to go up. So here's your top bottom on the 1 minute. We gotta go up now. Otherwise it's lights out. It's gonna backfill. So the buy limits are the backfill if you're in an uptrend. If you're trading in an uptrend. If you had a say you wanted to trade buy stops, trend trade on the 5 minute, you make all these charts, 5 minute charts, and you're waiting for that or just pull the trigger at the market every bearish candle. You pull the trigger at the market if you're gonna trend trade it on the 5 minute chart. It's just you run super tight stop, and you have you're risking 1 to make 3 because you're trying to get this. Since you're buying into the pullback, it's okay to buy because you envision a trend. Here I'm just envisioning that they're going to smash this thing to bits down in here somehow, some way. And I'm always putting in these outlandish orders. And the easiest way to do this is just to put your orders at where people shop. They're always shopping the 50-yard line. Even the sellers, like, say this thing's screaming north, and you're like, well, I'm selling at the 50. You're crazy, man. It's going up. Okay, well, you're selling here just because it's at 50 cents. It's stupid. And this, if you have a buy limit here on the top of that hammer, there's your fill going the other way. And this trend here is just like, you can't believe how beautiful that is. Like, it doesn't get any better than that. But the problem is, if your moving averages is running at 20 on the 4 hour, your moving averages is ignoring this whole move. You know what I'm saying? It's ignoring that whole move, and it's as if it doesn't exist. It's totally inconsequential. Get out of here. You stay away. No problem here. But this is the way I'm looking at it. I don't care about any of this other analysis. I just don't care. But I'm not a trend trader. I can't do it. Of course, and this is just price trading here. People see that price action. But there's the action, but here's the price. So this is all you're looking at is price. When can I get it at the round? Get it here. When can I sell at the 50? Now here, they would have blown you out if you had a 25 pip stop. But if you had a 50 pip stop, of course you gotta have your 10 on this chart. You have to have a 15, a 20, a 25, a 50. I wouldn't go past 50 pip stops. Let them smash you out. Here you cleaned up just by buying here. And they really tested the hell out of that. Now, if you want to put a 25 pip grid in, I just try to make it so it was kind of leaving it to some kind of a little slop in there. You can obviously see this is 25 pips. If you know this is 100, this is 50. A lot of people don't need to see all the hash marks on the football field. But if they run the ball back into this, right, you're going to get out here. So you have to build that into all these buy limits. Some of this stuff I dropped is just completely random. Now, this is pretty much... so when the account gets bigger, then you would just put in more orders. So I'll buy this below the 100-yard line for this kind of move. If I saw this is not, if this isn't the best trade, bar none, without regard to anything other than the fact that even on this day here, you could have put orders in to buy at the 100, at the 50, and here. You got filled on these two, you wrote it to here, or maybe you wrote it to here. Why are people putting moving averages on these screens? If you're cloud trading this thing, look for, well, if the cloud's down here, everybody's going to buy in the cloud and out of it, or they think that I'm going to buy what crosses over the cloud. The problem with the cloud is it's a big ass delayed moving average. But how about just good old price? What happened to good old price entry? You're not going to see this because people don't want to accept the fact that it's just about price. There's nothing magical here. Whatever a country says about their interest rate, if you have a way to get in with 1,000 pip stop and ride some monster move to make 5,000 pips, why wouldn't you do that trade? If you could afford that trade, does it sound like a good trade? If on the chart, without backtesting, just say no to backtesting because you're just setting yourself up for the anticipation, expectations, and a real heartbreak because that girl that you think is hot, she's got a bad case of something. So you can draw this thing and say, oh, look, we broke off pound support, I'm going to load the wagon. Yeah, but what if we don't load the wagon? In other words, what if this trend line breaks? What if this is the new normal, right? Now they're just blowing shit up for shit's sake. So this support became resistance. Oh, I loaded the wagon on the short side. Well, it's not going to matter to the guy that's just trying to pay the rent and the guy that just has a little shop down the street. And he's like, hey, man, you got any stuff at this price? Gosh, I mean, if I could get it for this price again, but maybe this is as good as it'll get. And when this was up here and everybody's bullish as it can be, right? A lot of people wanted to buy on this pullback. They got crushed. They had to have another grid in to buy either really heavy here, knowing the internal top structure here, and then this one here was going to be a bigger battle zone at this 50-yard line than at the 100. The 100 was, if you had a stop like this, yeah, that's your exit. So maybe you are short off this. Obviously, this is the feeding zone. Here's you're going to project down to this. But who's not getting in on the other direction? It's X amount of pips north. everybody's going to be getting in at the next train station. These are the train stations. The question is, can we make it to here by... So is there any way this thing can make it to here? Well, if it makes it there in the news, who's not buying down here for a scalp to here with a 50 pip stop? It seems inconceivable that something could be so stupid easy and be so hard to accept. It's really hard to accept. I find it unacceptable. And selling up here for a scalp, 12-hour sell limits up here. I don't care where this thing's going. I don't want to buy it if it goes low. I don't want to sell if it goes high. How high is high? Well, if you just place all your orders on the 50s out of the gate, there's going to be a huge fight up here. What do you think is going to happen if it goes up another 50? So let them stop you out. Put a 22 pip stop on a 50 pip grid. Let them take you out. So here is a 18 pip stop at the hundreds. How is that not a good trade? 30 pip stop on the 50s to make 80 pips. How is that not a good trade? News comes out, comes plunging down here. Now these are super tight, but these might be 15-minute orders and these might last all week. How is that not a good trade? Do I have to backtest that? No, because I've already figured out that an 18 pip stop makes 36 pips. I already did the math on the trade. I don't need to backtest that. You don't need to backtest risk to reward ratios. So all this talk about backtesting Gartley's, you're ridiculous. It's ridiculous. So my British pound's making money. So here's the trap trade. I'm about to get out. I'm going to get out at the 100-yard line. You got a 4-minute window here. You could bust through this thing. Right now it's challenging this downtrend line. So you buy it to 50. Now, if your buy limit's sitting at this 50 and the spread's favorable, how did you just not make 50 pips just by buying down there? How did you not just make that money? You did. You made it. Congratulations. You are now you're like an unbigoted trader. You don't care. You just shop price. You don't care who's got it. What if the guy that's selling it to you has the worst tattoo art you've ever seen in your life? Are you still gonna buy it from him? Well, in this market, you just don't care. You just can't care, man. Stop with the caring. Stop with the get a girl on the side. That's all I'm saying.